Today is Thursday, January the 24th. There is a rumor that we are going to have resolution to the government shutdown. Perhaps, there's rumor yesterday having a little bit to do with the bounce action. Today, we're fading into our overnight support. As we look at this right now, coming into this region, we should bounce. If we do fade, the first thing that's likely are buyers to come into the mix to try to fill in the volume profile here. There's a lot of room on the way down for this positioning. So what we have to do is make the decision to either step aside until the resolution is ready and then we engage, or we play in the middle of this noise. And you can do two things. You can bet that you know the direction and you can sit tight after you've engaged. Just prepare to leave if you're wrong. A lot of us like to position ourselves and wait. I'm not so much that person. I like to have the resolution and then follow through because I don't enjoy making mistakes. And there are a lot of people that count on me not to make mistakes. And so that is my general approach. Here, I'm going to look for the failed retest of this 26.26 to 26.28. As long as we hold the prior day's low in general, or the low from a couple of days ago, really, we're going to be in pretty good shape. We had a lower low yesterday, and so coming back into this area, nothing has changed. We're still moving with some upside drift. We're still caught in the ranges of motion, and so my thought is until we have a catalyst, we're going to stay squeezed in the environment. That's going to give us choppy action in the midst of everything, and that's going to be true no matter which instrument we look at from the broad future space. Here we are with the NQ. We know this number at 66.96. Really, in order to get up and over, it's 67.10, but we really could start looking at things once it gets above that 66.96 in order to engineer where we're going. Right now, we're sitting underneath the volume point of control. That's a bit negative as it goes, so wouldn't be surprised if we came down and tested lower edges here, but we could also continue to hold the bounce. Whichever the case is, the charts are incredibly messy, and messy with the addition of increased volatility with the SPX spreads tell us that whipsaw is likely, and you don't want to sit on the wrong side of that. You don't. What's the point of that? Our job is to make money, not to be engaged. See, if you talk to a financial advisor, they will say, be engaged. But how are they compensated? They are compensated by your engagement. See, for us, if we are managing our own portfolios, we are not compensated by being engaged. We are compensated by being engaged correctly. And that makes all the difference. If you want to look at your charts in that way, you've got to see, hey, listen, I still have grinding upside support. I still am holding my pullbacks on that support. And so either I take a chance and I get involved in the noise, or I get involved on the edges of the noise. That's going to be your choice. You have control over the risk that you want to expose yourself to. And I can tell you that a lot of managers are looking at the marketplace as a space filled with uncertainty and a higher level of risk. All right? That's just is what it is. Right now, I see the edges being reversals. Those edges could be bigger and deeper, but they are still going to reverse. There's too much cross current in the market. In general, oil, interestingly, news Venezuela, we could be putting more sanctions on them. We could be all kinds of things moving around. Apparently, we've backed some new leader down there. And I know I sound so engaged about the information. Here's the thing. There's a lot of hubris when it comes to looking at landscapes, political, physical, fiscal. There's all this element of ego really sitting in the midst of things. And what we have to do is watch things converge and resolve. Right now, they're converging. Squeeze action just like yesterday, just like the day before. Edges are going to hold until they don't. And it's as simple as that. I know it sounds really ridiculous, but it really is true. And you're taking a bet on which way it's going to resolve ends up being something that you have to properly assess with a measure of risk. All right. And if you are wrong and you know you need to turn around, are you going to be mentally equipped to do it if you've already created a cognitive bias that says this is the way it's going to go? My thought is, how about you let the market tell you where it's going and then become a swift adopter of that motion? And right now, we are at pivotal regions. These guys are going to resolve. This squeeze action always occurs before range expansion or range movement in one direction or another. See it here? Compression, expansion. It just happens. It is a cycle of motion in the chart. Gold, still looking at a weekly, still looking at the bounce zones here. Could it bounce? Absolutely. Is it range bound? Absolutely. If we go to a daily formation, we're going to see a lot of noise. And that noise, resistance, support, all of these regions are looking at, hey, I'm going to bounce off of this zone. And if it says old resistance becomes new support, this is still buying pressure until it falls below that area and fails a bounce. That's what we're looking at here. Deep dips still going to give us buy zones in general. If you're thinking about shorting gold, don't do it on the lows. That's just going to expand your risk dramatically. All right, good luck trading today.